This is going to play for me. All right, so here we go. We're doing our general journal here. First step, we're going to look at balance day adjustments. Now, the first one I'm doing is the accrued rent expense, $90, and the rent expense here. After that, we have a prepaid expense, and we have the interest expense there. Now, it's going to be up to you guys to figure this out. Okay, after that, we have a commission revenue, which is also an accrued revenue. So there are 3 balance day adjustments. Finish them off. Now, once we've done our balance day adjustments, I'm just going to put a little thing in here so you can see what that is. This is a bit boring for a bit. Now we're going to move on to our closing entries. Now the point here is to close our revenue and our expense accounts to the P&L summary account. This is stuff that you guys have done before, so it shouldn't be too tough. So you've just really got to go through this list and find your revenues. Now the only revenue in that list is a sales revenue, and we're closing the sales revenue to the P&L summary. Now it's a bit of a trick question. So much so that I've made a mistake, but we'll get back to it. Now after that, we're closing down our expense accounts. You've got to go through these and be able to spot all of the expense accounts. Now not every account there is a revenue or an expense. Some are assets, liabilities, owner's equity. So it's going to be up to you to figure out which ones are which. Bad debts is something you guys haven't seen before. A bad debt is when someone owed you money and you've written it off because it's just never coming back. That's an expense.
Okay, so this next bit, I stuff up everything. I debit when I'm supposed to credit, and I credit when I'm supposed to debit. Everything's on the wrong side here. If you're not sure, talk to me about it.
Now, it's up to you whether you put your money in as you go or whether you do it the way that I'm doing it. There's advantages and disadvantages to both. You decide on what your best option is here. Now, don't try to add these up by hand. Excel does formulas for you, so you're going to use your sum there. Now, here's the mistake that I made with my revenue account. Commission revenue. For some reason, at the end of the year, someone's made some commission. It's the only commission we've made all year. This is the dumbest thing I've ever seen, but it is the sort of thing that you would probably put into an assignment. Okay, so 2 other mistakes. Our expenses have been adjusted here and here, which means that our interest expense has to be adjusted here, and so does our, the other expense was a rent expense. That one also had to be adjusted. So 2 adjustments have been made there to our closing entry. This is a key mistake that probably about 50% of us will make. And that's really the end of closing entries there. But now we need to bump over to the ledger to create our profit and loss summary account in our ledger. Now we're only doing a ledger extract here. It's not like last term where we did every single ledger and it was really, really painful. We're only doing the P&L summary ledger. Now I'm doing a lot of copy and paste here. You guys should do the same. There's no point writing stuff out over and over and over again. You can see that this process is it's a pretty straightforward process. Now balance these up. Now when I do this, I make a mistake. These should not, well, I've sort of made a mistake. I've added these up, and it gives me the capital loss, but I then need to adjust these numbers so that they're equal. And I don't do that until much later on in the video. So you need to take a look at your P&L summary account, add up both sides, figure out whether he's made a net loss or a net profit, and then go from there. All right, so after that, we are transferring our net loss or our net profit to our capital account. Well, actually, first we're we're transferring our net loss or capital. These aren't surprises. These will happen every single time. Either it'll be a net loss or a net profit, but it'll always happen. You'll be transferring something. Now this is where we transfer our drawings to our capital account. And again, this always happens. There's always some drawings in there somewhere, so expect this to happen at some point. Okay, that's really the hard part of things. After that, it's all about the income statement and the balance sheet. Now, I've named the income statement RPAL. I probably should have named the ledger RPAL and the general journal RPAL as well. You will lose marks if you do that. Don't do it. Okay, so sales, less return inwards, less cost of goods sold. This is standard. So it's that number minus that number, and then in the second row we write our list of cost of goods sold. You've got to memorize this pattern, essentially. There's no way around it. I haven't memorized it. You'll have to. Now, less other expenses. You see another copy and paste happen here. Now, that copy and paste is problematic. It's problematic because you've used cost of goods sold there already, and you've also used return inwards. So you need to make sure that you get rid of those when you do that. All right, so there's all of our expenses. Then we take one away from the other and we get our net loss. Bold it, put a dollar sign on it, it's important. After that, we're looking at our balance sheet. These are our assets, our liabilities, and our owner's equity. Now, there's a couple of little tricky bits that you're going to spot here as we go through this. First, we do the really simple stuff. We just go through here and we find all of our assets. Put some numbers in. These are not all of our assets. There is at least one or two more assets to come. And those assets come from here. Remember that pairs are assets, which means that any prepaid expense is an asset and any accrued revenue is an asset. In this case, we have two. So we write those in there. Now, I'm just rearranging this a little bit in order of currency. Bank, accounts receivable, inventories, then our prepaid expense, accrued revenues, and then the rest of it. Add them up, put some lines on. Now we're going to do less our liabilities. Same process here. We find our liabilities in the trial balance first. And we're going to find one more up here. An accrued expense is a liability. Make sure you come there and find that. In these sorts of questions, there's always going to be something from the balance day adjustments that you're going to have to deal with. All right, less our liabilities. That gives us our net assets. Assets minus liabilities, net assets. Now that's represented by an owner's equity, which is given by capital, which is found in the balance sheet, in the trial balance, sorry. Less the net loss, which we did in our journal entry, and less the drawings, which you can find there. If you've done everything correctly, those two numbers should match up. If they don't, time to start panicking. All right, just neaten things up. Game over. Now, just going back through this, there's our general journal, there's our ledger. Now, this is where I spot my mistake. Okay, fix that up. Done.
you could share with us, please?